Why 90% of traders fail? And how can this strategy fix it? That's exactly what we're talking about today, using a powerful combination of Bollinger Bands and MACD. Most traders are using broken tools. They rely on indicators with fixed settings that just can't adapt to a live market. The RSI, for example, is famous for catching reversals, but in a strong trend, it'll scream oversold and overbought way too early, getting you into losing trades over and over. Then you have moving averages. They are great for spotting the trend, but the minute the market gets choppy and moves sideways, they're worthless, just chopping you up with bad signals. After years of getting frustrated with these exact problems, I figured out a different way to do things that changed the entire game. The secret is like a strategy using an indicator that adjusts on the fly to market volatility. It's smart enough to know when you're in a strong trend or stuck in messy sideways market. That means you get crystal clear signals, whether you're riding the crazy ups and downs of crypto or playing the smoother moves in forex. This adaptability is key to understanding why 90% of traders fail and how we can flip the script. So, alright, let's dive right in and check it out. First, jump onto TradingView. Head to the indicator search bar and type in Bollinger Bands breakout strategy. You'll see a few options pop up, so be sure to pick the one by Trade Chartist. It's the one we're rolling with, so don't grab the wrong one by mistake. I'm running this example on the 15-minute Bitcoin chart. But here's the best part. The setup is super flexible. It works on any market, stocks, crypto, forex, commodities, you name it, and on any time frame. So whether you're a day trader bouncing in and out, a swing trader holding for a bit, or even long-term investor, you can tweak this to match your vibe. So how does this actually work? At its core, it's built on a classic indicator called Bollinger Bands. Picture of a moving average line smack in the middle with two bands on either side. When the market gets wild, these bands stretch out wide. When it comes, they tighten up. The strategy uses two bands to split out signals. The rules couldn't be simpler. When the price closes above the upper band, boom, you get a buy signal. When it closes below the lower band, it's your sell signal. Now what about exiting trades? The indicators got you covered. It closes out a trade when the opposite signal pops up. So, if you're in a buy trade, you'll hold until a sell signal shows up, meaning the price closes below the lower band. Same deal the other way. If you're in a sell trade, you exit when a buy signal hits, so when the price closes above the upper band. Alright, I crunched the numbers, and yeah, the strategy makes money. But if you dig into it, there's some stuff you gotta know. Over 132 trades, the win rate's only 37%. That's pretty low even though it pulled off a solid 18% profit overall. But here's the real kicker. It's got a max drawdown of 10%. That just means at its worst moment, the strategy was down 10% from the high point. For most traders, taking 10% hit to your account feels way too sketchy and stressful. This drawdown is a prime example of why 90% of traders fail. That's exactly why I'm telling you straight up, you need a confirmation indicator to tighten this up and make it safer. The indicator I've been testing and getting awesome results with is the moving average convergence, divergence, or just MACD for short. Super easy to set it up. Head over to the TradingView, hit the indicator section and type in MACD or moving average convergence, divergence, and add it right into your chart. Alright, here's the scoop. The default MACD settings works great for spotting out signals, but they're not great for confirming trade. So we're gonna tweak it to sync up perfectly with the Bollinger Bands breakout strategy. Head to the MACD settings and crank up the length. Set the first length to 100 and the slow length to 200. Leave the MA type on the default EMA. No need to mess with that. Now, the real trick is checking momentum on a higher time frame. Since we're on a 15-minute chart, let's bump up the MACD to a 45-minute time frame. Going 1 or 2 time frame higher is the sweet spot. So, whatever chart you are trading, just set it up a notch or 2 for the MACD. Since we're using this as a confirmation tool, ditch the MACD and signal line options. They're for generating signals, not what we're after here. For visibility, switch the histogram to an area style and set the colors to green, white, and red. That's it. You've got the MACD dialed in and ready to roll. So, here's the deal how this works. When the MACD histogram is red and sitting below the 0 level, the market's in a bearish mood, trending down. And when it's green and above 0, you've got bullish momentum, signaling an uptrend. But just knowing momentum isn't enough. You need a clear trading rules for when to jump in and where to set your stop loss and how to exit. This is a critical piece of the puzzle that helps this strategy fix many common trading pitfalls. But quick heads up before we dive in, risk management is hands down the most critical part of trading. If you're new to it or need a refresher, make sure to watch my deep dive risk management video right after this. Links in the description and popping up on the card right now. Alright, let's break down the rules. When the Bollinger Bands flash a long signal, meaning the price breaks above the upper band, check the MACD. It's gotta show bullish momentum with the green histogram above the 0 line to confirm the trade's riding the market's wave. If it's green, go for it. Open a buy position. Set your stop loss just below the middle SMA line or the most recent swing low. Whatever feels safer. For profit target, shoot for 2R or maybe 2.5R to lock in those gains. This is how this strategy fixes those risky entries. Now, what if the price breaks below the lower Bollinger Band but the MACD isn't showing red? Simple. Pass on that trade. Same goes for a long signal with no green MACD area. Just skip it. Only pull up the trigger on trades when the MACD backs up the Bollinger Band signal, like the example you're seeing on your screen now. This disciplined approach is crucial for understanding why 90% of traders fail. They don't filter enough. And that's the whole setup. By combining the adaptive power of Bollinger Bands with the confirmation of a well-tuned MACD, you're building a truly robust trading edge. Seriously, don't slip on that risk management video. It's a total game changer. It's a huge part of how this strategy fixes those common trading errors. Links up on the screen now and in the description below. If you found this video helpful and want to stop being on the 90% of traders who fail, please smash the like button and subscribe if you haven't already and hit the notification bell so you don't miss out on my next trading strategy breakdown. Let me know in the comments below if you tried this strategy or if you have any question. I love to hear from you all. Thanks for watching and I'll see you in the next one. Happy trading!